All right, welcome back to this week's breakout watch list from December 19th to the 23rd. Now, obviously, we're coming off a pretty poor week in the market last week after lower than expected CPI came out on Tuesday and we had that gap up. From there, we just saw selling between the FOMC meeting and quad witching on Friday. So it's very important to understand that this is not a high probability trading environment to be trading on the long side. Now, we will be going over 10 setups from the long side, but these are watch list names only. The 10 stocks that we'll cover today either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. If you want to see the stocks on my watch list to potentially short, I've dropped them in the comments below. And finally, before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Now, as the market deteriorates, there's a clear group fighting that downtrend, and that's biotech stocks. So I have split up the watch list between others and biotech. So let's jump into MarketSmith and break down each of these setups. The first stock that we'll cover is a semiconductor stock. It's ACLS. Semiconductor stocks have been working their way up. Right now they're ranked 35th out of 197, so that's an A- group strength rating. Fundamentally, this is a strong stock as well. Earnings are decelerating, but they are still improving, which is nice to see in a bear market. Sales are up 30%, after-tax profit margin improving, so fundamentally relatively strong here. Now, this is a stock that I was watching to see with the breakout over 80, but this pivot looked just a little too clean, and in a bear market, we know that pivots this clean or right into all-time highs typically get sold off the first time through, and that's kind of what we saw last week. We saw a strong move from 80 up to, what was the high here, 88.73, and then as market pressure came in, this pulled back as well, but still held the breakout point. The low on Friday was $80.20, so that's nice to see. We're still above the 21 EMA, also a great thing to see, and outside of Thursday, we didn't see any above average volume selling. Now, you do notice that we see above average volume on Friday. That is mostly due to the quad witching, so we have to take that with a grain of salt, any volume on Friday. So with this, what I would love to see is respect for 80 on the downside, allow that 21 EMA to catch up, and then eventually play this maybe in the second half of the week with a break over the high from Friday, 82.75. The next stock that we'll cover has been on the breakout watch list before. It's ARHS. This is in retail home furnishings, the 148th strongest group out of 197, so not a very strong group. That's D+ group strength rating, but fundamentally, we see earnings and sales are starting to accelerate. Earnings per share ratings, 99 according to MarketSmith, which is nice and strong. And this has an individual relative strength rating of 95, and that relative strength line is climbing, which is exactly what we want to see out of this stock. The price action last week, very volatile for the market, very volatile for most stocks, but this was actually an inside week of price action, respecting the 21 EMA, finding buying support right at that area. Great to see here. Looking at this full picture of the IPO, we have the left shoulder, head, right shoulder. We're climbing up the right side of the base, and we're kind of putting in some VCP action where we pull back from 947 to 423, rally right back up to 973, down to 682, so higher low, more condensed in the pullback. Third pullback, more condensed. Fourth pullback, more condensed. So we're looking for a break over $10 as a potential entry point for ARHS. Next, we have the footwear stock, CROX. Apparel shoes, 8th strongest group out of 197. So A+ group strength rating, 98 earnings per share rating, 98 composite, along with a 96 individual relative strength. So right off the bat, the stock checks a lot of the boxes that we look for. This eventually put in a low around $46, $46.08. Continues to put in higher lows in the market, back above all the key moving averages. There is a relatively large amount of overhead supply, so we're not looking for a massive move like a 30, 40, 50% breaking into all-time highs, anything like that. This is very much just a swing trading setup. We did break over $100 a couple times here, but eventually, as that market pressure came in, we pulled back under $100 and did undercut the 21 EMA, but not on much heavier than average volume on any of these days. In fact, many of the heavy volume days have come on days that the stock has been up, showing that it's being accumulated versus distributed. Now we're kind of just wedging into the 21 and the 8-day EMA. This had a nice reaction on Friday, up 2.8%, closing right near the high of the day, 80% closing range there. So with this, we're just looking for a break over Friday's high, 95.89 as a potential entry point for CROX. Next, we have the payment processing stock, FOUR, Shift4 Payments. This is a stock that's been on a lot of people's watch lists, so it might be a little bit overcrowded of a trade, but still wanted to put this on because we are starting to work up the right side of the base on this one. It already has very strong fundamentals. The group strength isn't very strong, 109 out of 197, so C plus there, but relative strength 90. And like I said, we're starting to work up the right side of the base, putting in higher lows, higher lows, higher lows. And we're back over the 200-day and the 50-day moving average now, and those two are right on the same price, which is nice to see. Soon the 50-day is going to reclaim the 200-day, and the 200-day is going to start to get into an uptrend. Similar to ARHS, what I really like about this setup is the previous week we had a nice rally through 50, but all last week in a pretty heavily news-driven price action environment, this was very tight and on lower than average volume, except for the one day that it tried to rally on Tuesday with the lower than expected CPI numbers. So from Tuesday, when the market started aggressively selling off, this just kind of pulled back into the 8-day EMA, never broke under 50, and just traded sideways on lighter than average volume. Very, very good sign of relative strength and accumulation there. You saw that relative strength line scream higher because we did see the sell-off in the S&P 500. So with this, if we get more action to the downside in the just general market, I want to see if $50 holds as potential support, or maybe just a quick undercut and then reclaim a 50 could be an entry point. But at this point, just looking for a break over Friday's high, 53.25. But ideally, we get a couple more days of tightening up before we take that area out for FOUR. And finally, the last biotech stock that we'll cover today is MGNI. This is in Computer Software Enterprises, 86 out of 197, and that group is starting to work itself up, which is nice to see. This is a stock similar to CROX with a lot of overhead supply, very much of a swing trade setup versus a long-term hold at this point. But the stock does have strong fundamentals. Earnings are growing, sales are growing, after-tax profit margins are improving. But most recently, after this most recent earnings, we saw a dramatic shift in the volume pattern. Instead of being distributed, a stock in a major downtrend, we're starting to see all the heavy volume days come on up days and strong closing ranges off the lows here. The first day, it was up 66% on 660% the average daily volume. We got follow-through volume and price action through the 200-day moving average the next day in this move, where the stock was up 21% on 400% the average daily volume. Very strong closing range there. And you could just see all the massive volume comes on the blue days here, and that blue day means we were up on the day with strong closing ranges, which is amazing to see. So as the indexes pulled back, this did pull back to the 21 EMA, but always on below average volume on the red days. And we did see a strong price action on Friday, up 3.96, call it 4%, with a relatively decent closing range right on that 8-day EMA. So with more market pressure, I look for Thursday's low of 1081 and the 21 EMA to hold. But on market strength, we don't want to give the stock any excuses. We just want to see a break over the high 1150 as a potential entry point for MGNI. The first biotech that we'll cover is AXSM. And I have had a recent trade on this where we had a really nice high volume move with a relatively strong closing range where the stock was up 31.5% on 600% the average daily volume. We pull back and do undercut 70, but then the next day, the day before I took the trade, we had very, very light volume and respect for 70. So as we pulled into 70 the next day, that was my entry point right around 70, I think 70.50. And then it immediately got out. I sold into strength the entire thing that day. But from there, it's been acting relatively strong, continues to ride the 8-day EMA higher. And then with market pressure coming in, this pulled back and did undercut the 8-day EMA, but had a strong closing range up 1.2% on Friday. So with this, we're looking for a break over 80 as a potential entry point. But if we see more market pressure, pulling back in and allowing the 21 EMA to catch up, and we'll trade this maybe at the start of next year, would be perfectly fine as well for AXSM. Next biotech stock we have is KNSA. This is one that actually does have earnings up 823%, sales up 719%, after-tax profit margin improved by 226%. So fundamentally, actually, this last quarter was very strong for the stock. You can see a nice rally from $7.30 up to $17, so more than 100% off the lows. We have the 200-day in an uptrend, the 50-day in an uptrend, and the 8 and 21 right on top of each other, basically right where price is as well. On a weekly chart, you can see we are starting to move into a stage 2 uptrend, which is also great to see for this stock. It does trade relatively light, so 400,000 shares traded at around $16. Maybe that's too light for you. If so, just skip the stock. That's completely fine. What I notice here is this looks like a pretty steep sell-off through the 8 and 21 EMAs, but it came on extremely light volume. So not as credible of a sell-off. To me, probably just short-term traders taking profits as the market rolled back that week. But last week, very tight price action. Again, we ignore the volume on Friday because of quad witching, but very tight price action, just building a pivot at like 16.16. So break to the upside, especially on market strength. That's a potential entry point. Otherwise, if this goes sideways for another week, that would just improve the setup for KNSA. Next, we have PCVX. This has been on the breakout watch list for a couple weeks. I know a lot of people have been posting about it. So if we know that this is one of the setups that a lot of swing traders are trading or looking to trade, we know that we need to take at least partial profits a little bit quicker than normal if the stock does break out, especially in a bear market. Any heavily watched swing trading name is more likely to have that breakout and then immediate shakeout either on day one or on day two of the price action. So just a little bit of warning there. If I'm playing this, I'm playing for a quick move and selling some into strength basically immediately. But this is a stock that was up well over 100% in less than 8 weeks on this move. Heavy volume. We did have one day where we shook out to the 21 EMA and respected the round number of 40. Closed very high in the daily range. That was 85th percentile right there. So that was just kind of a shakeout. We attempt to break into all-time highs, and this is exactly what I'm talking about, where this stock got, after a shakeout, got nice and tight, breaks out into all-time highs, and then squats and closes right at the previous close. So this was like I wanted to say this was like a 7 or 8% move, maybe even higher than that, but then it closed flat on the day. So that's what we need to be careful about. After that, we eventually roll back through the 21, undercut it, rally up, and we see nice tight price action the rest of the week. So on strength, we're looking through 46.30 area, just the high from last week. On weakness, if this comes back to the 21 EMA and gives it another couple weeks, awesome action as well. But again, if we're trading this to the upside, we definitely want to take partial profits on the way up because we see historically, this has the ability to squat, and we're in a bear market. This is a heavily watched name. We have to be a little bit more careful. Exactly what I talked about with PCVX, we need to keep in mind with RXDX. This stock above 100% gain. So on this day, it was up 165%, on 1200% the average daily volume. We saw follow through volume and price action the next day, up another 22%, on 440% the average daily volume. Great closing range. And then just kind of flagging out as the market pulls back, very tight price action, which you love to see because it's not like this stock was up 130%, 140%, whatever it was, and then immediately sells off. We're seeing more short-term traders take profit than institutions just dumping their positions, which is nice to see. But everyone can see this power, everyone can see this flag. There's not many quality setups like this, so it's going to be heavily watched by short-term traders, swing traders. And we know short-term traders are having every trader is having relatively a rough market environment to trade in. So just like with PCVX, if we see a breakout, we want to sell some into strength, move our stop to break even, protect our downside as quickly as possible. But this is a name that obviously has a lot of power, has been very constructive in the pullback. A couple more trading days, allowing that at least the 8-day EMA to catch up would be great. Or if this does have a shakeout to $100 and the 8-day EMA, but it holds 100, that would be a nice setup, kind of like we saw PCVX, where we had that shakeout, tight price action, and then the breakout, but we do want to sell at least a portion into strength in that initial breakout. This is RXDX. The last stock that I have today is RYTM. This is a stock that's been on my leaderboard for basically all of 2022. We had a very strong move from $5 all the way up to $30. After a move like that, you would expect months and months of consolidation. And I would rather see the consolidation that we had than go to 30 and then immediately break down and fall back to $5. So while this looks like it's been very, very challenging to trade, you probably shouldn't have been trading it after a move from 5 to 30, and we would expect more consolidation. We eventually do break out of this pivot around 25.80, but like many stocks, that initial breakout, you get a check back to the 50-day moving average and $25. We did undercut it by about 9 cents there. Not terrible, but we get respect for the 50-day. And then last week, it broke out 19%. Market pressure pulls it back into the 8-day EMA, but we get a strong closing range on Friday, 74th percentile. Still down 1%, which is fine, closing slightly under the 8-day EMA, but still above the 21. So with this, we're just looking for a pullback buy. So if another day pulls back into the 21 EMA, and then we could use that day's high as a potential entry point, even better, especially with how the market's been acting. We don't want to get too aggressive with any trade that we make to the long side. But if the high from Friday holds, or the low from Friday holds as the low for Monday, Tuesday, Wednesday, then we're just looking for a break over Friday's high, 28.26 as a potential entry point. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the setups, you could give it a try yourself for 3 weeks and just $20 by using the link in the description below. And finally, if you want to hear more from me throughout the trading week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter. I post most often there, but I'm at Nick_Drendel on everything else. Have a great week, be very careful trading, and I'll see you guys in the next video.